Welcome to this presentation on the emerging economic and market scenario. We will also look at the budget expectations. The year 2016 ended with some tumultuous events. Globally, the election of Donald Trump as the US president was a totally unexpected event. Back home in India, we had a typical black swan event in the form of demonetization. And demonetization had big short-term monetary and economic consequences. For the markets, the market gave only modest returns in 2016. The Nifty appreciated only by 3% and Sensex gave only 1.9% return, even though the broader market gave attractive returns, far outperforming the benchmark indices. We are in the early days of 2017. What are the prospects for the global economy in 2017? What are the prospects for the Indian economy? What are the prospects for the markets going forward? What will be the budget like? This year's budget is going to be very unique. Let's try to find answers to these questions. The global economy is on the recovery path. Global economy is recovering reasonably well. The US is posting very good growth, 2.5% growth last year. Unemployment has come down substantially to 4.5%, which is acceptable levels of unemployment. The election of Donald Trump as the president has boosted the American business confidence. In Europe, the business confidence index is at a 6-year high. There are no major points of uncertainty or big problems in the US. In Europe, Japan also is showing signs of improvement with pickup in exports in recent times. The global economy has a positive backdrop at the beginning of this year. But the big uncertainty for the global economy is the Trump presidency. Donald Trump is an unconventional politician. He's a maverick. His views, particularly views on trade, are cut off from the mainstream economic thinking in the US, and therefore there is an element of uncertainty. He has already withdrawn from the Trans-Pacific Partnership Treaty, and he has already gone on record that he might impose 45% duty on Chinese imports if China doesn't behave properly. So that element of uncertainty is there. If he practices what he preaches, like imposing duties on Chinese imports to the tune of 45%, that might trigger a trade war. It might trigger a currency war, and a trade war and currency war will be very damaging for the global trade as well as for the global economy. But then Donald Trump is a very successful businessman. He's a very good deal maker also. Successful businessmen normally don't do anything that damages business and the economy. Therefore, let's hope that Donald Trump will not attempt any maverick policies that disturb global trade as well as the global economy. Back home in India, the Indian economy is limping back to normalcy. Of course, Q3 GDP growth and Q4 GDP growth will be down. To what extent it will be down, actually nobody knows. There are only guesstimates. The 7.1% GDP growth projection given by the Central Statistical Organization is based on pre-demonetization data. The post-demonetization data is not available. Therefore, all that we know is that it will be lower than last year, 16-17 GDP growth will be lower than 2015-16. But then from the data that is emerging right now, particularly corporate results for Q3, it looks like the economy is recovering very fast. Other data also indicate that recovery is on the cards. So at the present rate, we can expect the economy to rebound from the first quarter of 2017-18 onwards. So if that happens, naturally the prospects for the markets also will be very high, because on the monetary side things are very good from the market perspective. Inflation is down, both WPI and CPI inflation are lower than the RBI targets. Banks have cut their interest rates substantially. Housing loans have become very cheap. Interest rates are expected to come down further. So these are very good signs, very good indicators from the market perspective. Now let us look at this year's budget expectations. This year's budget is going to be very important. It is going to be very unique also. This budget has many firsts to its credit. Mainly there are 4 firsts to this budget. Number 1, this will be the first budget to be presented on the 1st of February rather than on the last day of February. So this will give the government more time for the implementation of its programs for the financial year. Second, this will be the first budget consolidating the accounts of the railways and the union budget. So the budget will be much larger. Third, this budget will be the first budget that removes the distinction between planned expenditure and non-planned expenditure. The main distinction now on will be only between revenue expenditure and capital expenditure. Fourthly, this will be the first budget after demonetization. So because of this budget is going to be a very unique budget. Also, this budget is going to be a very difficult and complex budget also, because the finance minister will be relying on the macro figures provided to him by the Central Statistical Organization, which itself will be based on the pre-demonetization data. So it is quite probable that crucial macros like fiscal deficit to GDP, etc., will be questioned and criticized, because the GDP estimates presently available with the government do not take into consideration the impact of demonetization, be they that as it may. Now let us come to the specific expectations on the budget. First, look at the expectations on the direct taxes front. Big changes are expected on the direct taxes front. The finance minister has already committed to reduction of corporate taxes. The finance minister recently went on record that it's time for lower tax rates on the personal income tax also. So it is quite possible that the corporate taxes may be cut from, let's say, 30% to 25%. If that happens, it will be very good for the markets and also for the economy, because cut in corporate taxes will boost corporate investment. Personal income tax rates that we have right now were the tax rates introduced by Chidambaram in 96-97 budget. 10%, 20%, 30%. That tax rates are likely to be tweaked in this year's budget. One thing we can say for sure is the basic exemption limit will be raised. If it is raised to 4 lakh, it will be very good. from the market perspective and also from the economic perspective. And it's quite likely that the tax slabs also will be tweaked. The market is expecting further concessions on ATC. If that happens, that will be good from the market perspective. Corporate tax reduction has become very important right now because Donald Trump has stated that there will be massive tax cuts, corporate tax cuts in the US. So this will compel other countries also to reduce their taxes, because otherwise we will not be in a position to attract investment from abroad. Also, if the tax rates in the US are very low, even our companies may think of going there and investing money. So cut in corporate tax in the US will trigger a chain reaction in the form of corporate tax cuts in other countries. I think our finance minister will anticipate this and cut corporate tax rates also. Coming to the taxes relating to capital market, that's an area which all of us are keenly watching. There were rumors last year and this year also, after a remark by the Prime Minister in one of his speeches, that the long-term capital gains tax may be abolished, but it is not likely to be abolished at all, because the Finance Minister himself clarified after the Prime Minister's remark, which was interpreted differently by different people. The Finance Minister categorically stated the long-term capital gains tax will not be abolished. So that fear need not be there. But it is quite probable that the period of eligibility for long-term capital gains, which is 1 year presently, may be extended to 2 years. That may not be a big issue, but if it is extended to 3 years, it will be negative from the perspective of the market. Let's hope it does not happen. Also, there are rumors that the short-term capital gains may be increased from 15% to 20%. Remains to be seen. It will be negative for the market if it happens. Also, another expectation, not an expectation, an anxiety, if I may say so, a concern for the markets is regarding the dividend exemption limit. Last year, this dividend tax was introduced. Dividends beyond 10 lakhs a year will be taxed. So that exemption limit of 10 lakhs, it is possible that it may be brought down to 8 lakhs or so. That will not be a major issue as far as retail investors are concerned. So from the market perspective, we feel that there won't be any proposals that will be negatively impacting in the markets in a big way. Coming to indirect taxes, since GST is going to kickstart from the 1st of July, the finance minister may not be attempting any major overhaul at this juncture. It is possible that the service tax may be increased from 15% to 16% or so, because from the 1st of July onwards, it is likely to be 18%. So to align with the GST on services which are likely to be 18%, the service tax may be increased to 16%. It will fetch more revenue also till the 1st of July. There are some other measures expected from this year's budget. One certainty is there will be a big boost to affordable housing. Already interest rates have cut. Some special interest rate subventions on lower housing loans have already been declared. So there will be more measures to boost affordable housing, because this is one segment which can create a lot of employment opportunities also. Secondly, there will be a big boost to infrastructure. The government has to provide the stimulus for sustaining economic growth and pushing economic growth to a higher level, because private investment, private capex still continues to be sluggish. So you can expect a big boost to infrastructure, big boost through public expenditure programs. There will be incentives for digital transactions for sure, because that is a major focus area of the government. There will be disincentives on cash transactions, and the incentives on digital transactions. Then there will be big relief to farmers and the unorganized sector, which have been negatively impacted by demonetization. These are what we expect from the budget broadly. On the whole, we expect a growth-oriented budget. We expect a market-friendly budget. An imaginative budget can sustain the rally that is going on in the market right now. It can even trigger a major bull run in the market if the budget is very imaginative. Coming to investment strategy, investors should remain invested. It is not sufficient that they remain invested, they should continue to invest. They should continue to invest systematically. Retail investors who have expertise to invest in the market directly should do so. Investors who are investing through the systematic investment through the mutual fund route should continue to invest, should scale up their investments to the mutual fund systematic investment route. A big positive for the market right now is the sustained flows into the mutual funds. Every month now we are getting 4,000 crores to the systematic investment plans and 1,000 crores approximately through systematic transfer plans. That is gaining momentum these days. So approximately 5,000 crores are coming to the market through the systematic investment route. So this means 60,000 crores of mutual fund flows every year. This can be a big counter to the FII selling and capital outflows, which might happen because of some external triggers. Another positive is the FII selling has slowed down because dollar appreciation has almost plateaued and dollar index has come down in recent days. Therefore, we can expect even the FIIs to continue investing in India in the days to come. So, in summary, even though there is uncertainty ahead, even though we can expect volatility globally as well as in India, the prospects for the economy, particularly the prospects for the Indian economy and the prospects for the markets look extremely promising and good. Happy investing. Thank you.